Moving average trading strategies are extremely popular for active traders. Now on this YouTube channel, our 920 and 5813 EMA crossover strategies are two of our most popular. Now if you've seen them, thank you for watching. If not, check them out. All right, it's important to understand that there are times when trading moving average crossover strategies can get you into trouble. In this video, I'm going to show you 3 times when trading crossovers on intraday time frames is extremely dangerous. All right, let's do it.
Time number 1, economic events. Economic events drive massive participation in traded volumes to the markets. Accordingly, the ensuing price action is wildly unpredictable. This can cause swift reversals and fake out crossover signals. Now, as you can see, we have the ECB interest rate decision. That is a red letter event, a major economic event. And on this 5-minute chart, you can see our 5813 crossover strategy. It forced an immediate reversal. The traded volumes flew in, and all of a sudden, that initial crossover move was no longer valid because the market dynamic had shifted. On a 5-minute chart, on a 1-minute chart, these things can happen relatively quickly. So always be aware of key economic events. The most important are U.S. non-farm payrolls, major central banking announcements, and U.S. CPI. If you're active in the markets, knowing when these events are due to occur will save you money. Time number 2, consolidating markets. When a market's in consolidation, it has no direction. It's not moving up and it's not moving down. One of the reasons why this happens is there's low levels of participation. Traded volumes are typically much lower than normal, so this is what we would call a slower consolidating market. Now, with a crossover strategy, you're more likely to get chopped up with frequent crossovers because there's no rhyme or reason to the way the market moves. That's why it's important to understand when to trade crossovers and when not to. And if you don't know, don't trade during consolidating periods. Okay, how do I tell if it's consolidating? There's 2 ways that you can tell a market's consolidating. Number 1, just look for frequent crossovers. If you have a frequent crossover here, and here, and here, you know you're in consolidation. And number 2, a while back on a separate video, we coded a shaded area between the 9 and the 20 EMA. This shade shows us the distance between the moving averages. Remember, when that distance is wide, it means that the market's moving. And when it's very narrow, remember, that means that market's really shrinking up. So the question would be, Shane, okay, how can I use that to trade? I'd say, well, you'll notice right here, our moving averages are very close together. Maybe you don't take that trade. You know that the volumes are lower, our moving averages are closer together. We want to see things open up. Right here, we start to open up a little bit, but then we get back into that weave formation until we finally break when the volumes pick up. So remember, consolidating markets, absolutely huge that you avoid trading crossovers in flat, slow, consolidating markets. Otherwise, you're going to get chopped up and you're going to lose money. No matter what you're trading, switch markets can help. Switch's tight spreads and zero commission structure can help make your strategy a winner. SwitchMarkets.com. Bring your ambition into focus. Holiday sessions are not the best time to trade. Typically, participation is lower than usual, the markets are thin, and volatility is inconsistent. You definitely want to make note of any session where the U.S. markets are closed. That means liquidity providers are out of the office, and there won't be as much participation or steady volatility as we really like to have to make a crossover strategy work. A couple ways that you could figure this out easily on your own. CME Group has a great economic calendar feature. Gives you all the market closures and, more importantly, the early halts for things like commodities and also indices futures. Also, the second is just run a grok. Just run a quick grok test. When will the U.S. markets be closed in 2025? Go ahead and give it a run, and it'll bring up everything that you need to know. It'll tell you exactly which ones are closed. Some of them are no-brainers. New Year's Day, Martin Luther King Day, Good Friday, Memorial Day, Juneteenth, Independence Day. Now, there's a few holidays that really there is some nuance to. One of them would be President's Day, and I want to give you an example of why President's Day is one of those deals where the forex is open. It's a U.S. holiday. It's a bank holiday here, so a lot of traders still decide to trade it. If you're going to do something like that on something that's a bank holiday here in the United States, but we're still open abroad, you want to focus on pairs that probably aren't USD centric. This is a good example of why to avoid those pairs using a crossover. This is the Australian dollar, US dollar 4-hour chart, and you'll see all day long on that President's Day, Monday 16th and 17th of February, well, Sunday, Monday 16th, 17th of February, flat market. Absolutely nothing happened. You didn't get any crossovers on that time frame. Now, you can reduce time frames and maybe get a trade, but this is the same session on our 920 EMA that you've got on that President's Day. There's no crossovers. We finally get a crossover later in the day, and as you can see, it looks like a great move. There would be your sell. The problem is you only go about 20 pips, something like that. So then you get chaos. Chaos ensues out of nowhere. Holiday sessions are thin, and they're very difficult to trade successfully. So go. Time number 3 to avoid crossover trading: holiday sessions, any session when the U.S. markets are closed.
Winning with EMA crossover strategies depends on 2 things: timing and discipline. Now, you have to know when to apply your strategy, and you've got to have the courage to stick with it until your profit target is reached. That's what separates the winners from the losers: timing and discipline. All right, one last tip. When you trade any moving average crossover, the lower the time frame, the more likely you are to get chopped up. That being said, you can make money on compressed time frames such as the 1 minute or the 5 minute charts. You just have to be surgical with your risk versus rewards. All right, that's all for now. Like, subscribe, and we'll catch you on the next one.